That's clear on that CMA new draft regulations. John, before we went on break, you could hear Abraham say, when you see that happen, that CMA has only 500 that are worth 1 billion. There are more others that they have not factored in because they don't want to handle them. Is that, in a case like Abraham is saying, a clear sign of market failure, that there is something that is not working out in the Kenyan market, especially in the investment segment? Is that what it is, John?
For me, I think it's one indication that the Kenyans are willing to invest in vehicles that can give them resources. Okay?
Yes.
Kenyans do not have is education. In terms of, if someone tells you, I'm going to give you 100% return on your investment in this kind of economy, does it make sense? Really, as an investor, who can give you 100% back return? So I think CMA, first and foremost, should educate the Kenyans. It looks like Kenyans really do want to invest, have the meager resources. I wouldn't say they have much, but they can afford to invest because they want returns. I don't know whether they're greedy or not in terms of wanting, returns that don't make economic sense.
Yes.
In terms of 20% investment, 100% investment, these are not real. But it's a clear sign that there is room to bring in proper investment vehicles. There's a chance to invite investors who can invest, who are able to give a vehicle that can bring returns, though not unrealistic returns. So for me, I think CMA should do a home of looking into the database of these people and what they're offering, and maybe try and help them to doing, and Kenyans can then move to make more informed investment used to returns. They're hungry for returns, maybe too hungry, but there's room to bring governance, to bring proper machinery into what people are doing. So I think CMA should have a homework to go back and look at those people. What are they doing? How can they help them to do better? How can they regulate them better? How can they assure them that we're not gonna help people? You understand?
Yes.
Yeah, for me, I think that's what should happen.
Pretty much. Tommy Baindo, in just 15 seconds, a sign of market failure before we jump into the next issue?
Maybe regulatory failure. At the very least, maybe they should have a list of what not to invest in.
Yes.
That will probably be easier than trying to regulate the internet and crowdfunding.
Pretty much. Let's jump onto the last issue this morning, where KCB's local stake has jumped by 11 billion in the latest regulatory filings. Now indicate that KCB is among the biggest beneficiaries of the local individual and institutional investors, such as pension funds, who have added 245.742 million shares, or 7.65% stake in the lender between March last year and the end of last month. In total, local investors have now bought an additional 10.99 billion shilling stake in KCB since COVID-19 entered into the country last March, at a time when the trend has been international investors leaving the local market. Now, the Nairobi Securities Exchange values the shares at 10.99 billion as of Tuesday, when KCB closed trading at a high of 44 shillings and 75 cents in the share price standing. Now, total investor spending has seen the local investment rise to 68.8%, with international shares down to 11.44%. let's look at those key performance indicators for KCB before we cross over to Abraham. And we're comparing quarter one of 2020 to quarter one of 2021. And you can actually see the general trend is a bank coming back to its levels after a high grip of the COVID-19 pandemic. And remember, they were leading in terms of those loans that were restructured and non-performing loans as well in the country. And you can actually see they jumped in profit after tax, albeit by a smaller margin. But quarter 2 and 3 numbers are going to show us exactly where KCB are in 2021. Let's move on to the next one, which is their share price trend movement. And you can see it's pointing northwards as from quarter 2 onwards, and probably spurred by the original investments. Something in terms of that comparison that we have lastly for you in terms of net interest income movements in the various quarters. You're also going to say that that has jumped as well. Abraham, we spoke about this when it was happening earlier this year. You said, well, it doesn't matter as long as that investment is coming in. I'm going to pose the same question to you as well. You can see that international investment is now at a low of just 11%. What is really spurring this investment that we're seeing in KCB?
See, this was just, it's a sequence I told you.
Yes.
Corona came.
Yes.
Then people needed liquidity. The local investor left first. The international investor followed. Now, then the local investor has understood, and I told you that time, he's going to understand these trends faster than the international guy.
Yes.
They've already seen, okay, fine, we were in the pandemic dispensation, but this is how banks are adjusting to this, so it's a good buy.
Yes.
And you can see they've gone in. And probably the other guys who are buying when the international guys were leaving. Because I told you, for you to sell, somebody must buy. So these are the guys who are buying. Now, what will happen next, in the next 6 months or plus, the international investors will be back. Because their money has to have a home.
Yes.
Things are starting to stabilize around the world, and Africa being there, and our market being very organized, you will see them coming back.
Yes.
And you will see the share price rallying towards 50.
Yes.
Because they'll put pressure. And again, we have a concentration problem in the boss. We're talking about the big banks and Safaricom.
Yes.
That's basically it. The others are small boys and girls. So for me, this is just an indication of the trend of people adjusting to the reality that we are in this, and the idea of exiting exiting the market was not worked in the short term.
Yes.
Because you need your liquidity.
Yes.
But in the long and medium term, and you can see it's pension funds. Pension funds are in need for for them, they've taken what we were talking about, a long-term horizon.
Yes.
That over time, these ups and downs will even out to their advantage.
Pretty much. Let me cross over to Tommy Brendo this morning. Tommy, that even after KCB is now big in terms of regional investment, that this has not really changed the mindset of this international investor. Why is that the case? Because KCB is not just now a local stock, you can call it a regional stock now.
Like our panelists mentioned earlier, that
Yes.
is more attuned to the local trends that are taking place. And it'll take some time before the international work, because it'll take a little bit longer for them to understand our economy and our market. KCB is a good investment. They've consistently been making their net profits, and their stock price has been very stable. So
Yes.
this is one of the reasons why the local investor is quick and comfortable to invest in KCB shares.
Pretty much. John, question being there for this morning, is that a sentiment that while the economy is slowly getting back to where it needs to be, if indeed the banking stocks, which lost heavily in 2020, are attracting this sort of investment that we are seeing now in 2021?
Just like Tony is saying,
Yes.
that of course KCB being one of the major banks is a clear indicator of what is happening in other financial institutions
Yes.
in Kenya in terms of economic recovery, in terms of getting back to the normal. So I think that picking up in terms of investment, in terms of the economy, and course, the banks are a very good indicator of what is happening because they are at the forefront of what is of money being deposited, transactions being happening, business taking place, and the big banks like KCB are, are key indicators of what is the recovery process in the economy. So for me, I think what is happening in KCB is really an indicator of our economy, how things are recovering and how things are moving slowly, and how the investors and how local investors are slowly trying to move back to normalcy, to continuity of business, to just getting back on their feet.
Yes.
Despite the COVID situation.
Pretty much. Abraham,
Yeah.
an indicator that things are getting back to where they need to be if KCB is actually drawing this amount of local investors in the country?
You see, it is not KCB that has improved per se.
Yes.
It is the perception that has changed. There was nothing wrong with KCB all along.
Yes.
But at some point,
Looking at exactly how they went in 2020.
Yes. The performance went down.
Yes.
But that did not change the whatever was hitting KCB was external to it.
Yes.
Was not internal to it.
Yes.
So now that the external is stabilizing, then now we are all starting to see it the same way.
Yes.
And eventually, even the international guys will see it the way we are seeing it. Because remember, even when they'll be coming in, KCB will not have improved. It will be the way it is now.
Yes.
But they'll have now adjusted their view of KCB to the reality of it. So sometimes asymmetry of information really plays a big part in who invests and how they invest and or whether they invest.
Pretty much. Since we're talking about that, Abraham, is somebody going to say maybe things are changing? Because the bigger boys in that field as well, Equity now, they did announce that for the very first time after 2 years, they're going to issue their dividend this year. Is that an indicator, Abraham, that probably, things might be pointing northwards?
You see, I would want to hold that decision until I see the audited provision figures.
Yes.
Because don't forget, these are management figures. So these figures are out of the management hat.
Yes.
They can pull any figures they want. But the true test will be at the end of the year when now the auditors come in and look at the quality of the assets and put a provision to it. That is the point when you can tell whether these numbers were what they are. Because don't forget, management will always take an optimistic view of themselves. But when the accounts are audited, and you'll always see, they always adjust.
Yes.
Because when auditors come, they're external, and then the only rule book is the IFRS. The IFRS versus the assets. What is the impairment that needs to be taken? It hits your account, and this is the profitability. To me, yes, the pandemic is slowly going away, but the economic effects and them coming home to roost, that has still not happened. So we need to, yes, let's celebrate, but let's wait a bit longer to be sure that we need to really celebrate.
Pretty much. Yeah. All right, I'd like to thank Abraham Muthongo, the CEO, Miradi Capital, for joining us this morning. We are also joined by Tommy Wendo, who's a policy analyst, and Joanne Moneke, who's a financial analyst. Thank you very much for making your time. And you can actually take them all the way back to the time that we started these conversations on YouTube at Metropole TV KE, across all your social media platforms. And once you're there, you can leave a comment. Takeaway home is that don't be greedy. Understand, and Abraham, probably I may clear like this, and probably let's clear it like this. What is too much of a promise in terms of a return on investment? Which one should raise your eyebrows? We have some of them promising up to 14%. Which one should you stick with it?
The rule of thumb is if you cannot establish what the person giving you the money is doing with your money to get the return they are giving you, then run.
Then run.
Yeah.
Joanne, before you invest, what should you be looking at?
Like Abraham is saying, you need to look at what are they doing with your money.
That's it.
Call it cryptocurrency. I don't know whether it's right or wrong, but you need to check on your money. You need to check how much they're giving you back. Is it realistic?
Yes.
I think you need to be a bit educated. Look around what other people are giving. Then now base your investment on what other people are giving.
Pretty much. Tommy Wendo, what should you be looking at before you put your money into some investment vehicle?
Arnold has mentioned pretty much everything, but so is the individual characters who are running the business. They matter too, because they have a past, they have a history. You should go as far as you can when it comes to that, because people information, it matters as well.
Pretty much. And there's no better way for us to end this Friday edition. Good morning. I'll see you later on for Metropole News.